Okay, let's start things off here on the SPY weekly chart. As you can see, SPY gapped up this week, and looking back through the history of SPY, we've only seen a handful of gaps on the weekly chart. All of them have been filled at some point going forward. I would like to suggest it's very likely that this gap fills sooner or later, but it doesn't have to be right away. We're currently set to open gap down on Monday. If SPY continues to move down when the future market opens on Sunday, we could be opening with a decent gap down on a SPY weekly chart again. If so, that gap will eventually fill. Since it is a gap down rather than a gap up, the reliability of it being filled moves to nearly 100%. As of current on this chart, it really does look like we have a V-shaped recovery on our hands from the tariff market turmoil. Something to consider, as this is how the market cycles work. We get a massive sell-off, a bear market, then capitulation comes. That typically looks like a massive gaps down, like 1,000 points or more. Everything has crashed, everyone's selling, and then bam, institutions start buying. Then you get stuff like this where a V-shaped recovery comes into play. Most people are heavily underinvested. They're waiting for a pullback. That pullback never comes, and they miss out on the entire move. Let's move on over to the SPY daily chart here. All right, we obviously closed very strong on Friday. Then after market hours, Moody's downgraded the US credit rating. Last time Moody's downgraded credit rating, we had a 10% move down, but there was different conditions then. If the US had a bad credit rating, that equals bad credit ratings for corporate America. As of after hours price closed at 588.25, I would not be surprised if that selling continues into Sunday night and Monday pre-market. And we open with a substantial gap down. The thing to remember is that this market can afford a pullback. It absolutely can afford a pullback. If you bought anywhere down below, you're likely up 25 to 40% right now on individual stocks, and you have huge cushion to sustain some pullbacks. Opening gap down Monday means we are opening with a gap over a gap of red over green. Red over green just simply means we closed at the top and are opening below the bottom of the previous day. It's a sign of strength in gaps. Often we see gap and goes with stuff like that. Um, let's move over to the 4-hour chart here. Zoom out because this looks crazy messy here. Yeah, zoom back in a little. All right. So with everything going on, I see a few possibilities. The base case on a gap is always to look for a gap fill and then reversal. So a gap fill would be we open up right here, test the overnight low, get back above the opening print, fill the gap, see some type of reversal pattern, and then we move back down. You take that trade when and if, and only if risk and reward makes sense. Another possibility, since we do have a catalyst with this gap down, and it is a red over green, would be a gap and go. We would look for lower highs below the overnight low or under a downward sloping VWAP, then target level to level down. That would look something probably like this arrow here, higher, lower high, target maybe the top of this gap, monitor for continuation or reversal at that point for creating a lower high in the larger trend, or we fill this gap below here and then monitor for another potential reversal for making a lower high on the larger charts. We can absolutely afford to pull back to the top of this gap. we can afford to pull back to the bottom of this gap. That would be the ideal location for a lower high. I'm sorry, for a higher low on a larger time frame chart. But really, we could even afford to come all the way down here and still have a clear uptrend on the 4-hour charts, on the daily charts, etc. The weekly expected move from the options market is 603.40 high, 584.90 low. If we're gapped down to 588.25, we're already going to be nearing that expected move low. Wouldn't be surprised if we pull back and get below that even further, but you never know what's going to happen as far as that goes. And please, if you haven't already and you find the content of this video helpful at all I ask for is a simple like and subscribe. All right. If we move over to the hourly chart, don't mind all the messy arrows. We're actually currently right here and still with the binds of this hourly uptrend. And on the 15-minute, you pretty much see the same thing. We have broken this previous low in aftermarket hours, and it looks like the chart could be in the process of flipping to down on a 15-minute. But if the lockout upward trend were to continue, price is currently sitting at the ideal location for a higher low at that level. I would like to think with this gap down, probabilities may not favor it. We really do need a pullback. It would kind of be a blessing for a pullback at this point. Let's move on over to market internals, which unfortunately I don't believe I have open right now. Just gonna wait for that to load. I have a ton of stuff open and it is definitely taking its time. All right, that is open now. You could see here on VIX. On the VIX, we can clearly see fear has been basically in a downward direction. Although at 17.25, the VIX is still slightly elevated. Move on over to ADD, the advanced decline line. Let's change this over to an hourly chart so we can see more here. You could see we've been very positive on ADD. Friday, Thursday, Wednesday was negative. Tuesday, Monday. So for the whole week, we were mostly positive and had new money buyers in the market. Although on Wednesday, that day, SPY was completely consolidated. It was a terrible day to trade. Hopefully no one traded that day because if you did, I don't know how you could have made much money at all. If you look on over here at Tick, we have been staying pretty much positive through the week. We've really avoided the lower end with the exception of a few spikes down and just staying mainly above that zero line and in the positive area, indicating that the market has been strong. I do want to take a look at the different sectors of the S&P, another chart that I don't have open. Okay, if we start with XOK up here in the top left, that's the tech sector. You can see it's really running this lockout rally super strong, just unbelievable strength in the upward direction. XLF, the financial sector, is nearing all-time highs, also in a lockout rally. XLY, consumer discretionary, strong, clear uptrend. XLV, which is healthcare, not doing well at all in the healthcare sector. The move down is largely run by this United Healthcare crash and general other issues in this sector. We're also going to be taking a look at United Healthcare within this video. XLC, which is communication services. We have a hard uptrend rally, clearly. XLI, which is industrial, lockout rally uptrend. XLP, consumer staples, at the top of the bounce. We're at the top of this bounce range, pending if it's going to break out of the range or move back down to the confinements of it. XLE, which is energy, we recently broke below a bounce range, has moved back to the bottom of this bounce range, and we should be looking for a lower high here. The energy sector going down is actually deflationary since energy costs being less is real. So that's really what we want to see in that sector. Let's move on over to the Mag 7s. We will start with Meta. The base case for Meta is going to be a pullback to the top of the gap or gap fill reversal unless we remain in a lockout rally, which I'd be looking for 666 up near the top there. You can see the gap is here. So base case is we're looking to either come down to the top of this gap and reverse back up or fill this gap and reverse back up. Otherwise, remaining in a lockout rally, we should be looking for 666.10 to the upside. Next, we will take a look at Microsoft. Fix this chart here. Switch to the daily. All right. Microsoft, like Meta, has been on an absolute tear since earnings. The two have really been leaders the last few weeks. The base case I see here could be a pullback with the ideal location being about 439.50, the top of the previous high right here. Okay. Or if it remains in a lockout rally, breaking from this week's consolidation, catching a higher low above 456, and then targeting all-time highs, which is up here near 468. Microsoft has not, as of now, gapped down below the previous day's range, like many other stocks have from Friday after hours. And that's really just showing a true sign of strength. If and when at any point we come back down to fill the massive gap below us way down here, then we're in trouble. It's really far down there and it's really huge and would likely have a massive impact on the market as a whole. If I were a guessing person, I would expect it to happen on some overnight flash crash on some catalyst. If you look at the hourly chart here on Microsoft, you can see we have head and shoulders. We have the shoulder here, head, shoulder. So it would not be unreasonable for us to bounce down and target 446.90. Next, we will take a look at Google. All right, you might recall Google had a quick overnight flash crash a couple weeks ago with news related to Apple switching to their own search engine or something like that. That crash was over here somewhere. Here it is. We had that flash crash there, gap down. We've recovered all of that. We're kind of in a daily chart bounce range. On Friday, we did open with a gap over the previous day. I was able to catch that gap close. You could see I still have my risk reward set up there. So it opened up with a gap up, gave us a clean close of the gap. It's set to open gap down on Monday. So if things stay that way, I might look to Google for a potential gap close. Considering the relative strength it gave us last week, there is some thin structure below. So if we get below the current overnight low and continue down some, it shouldn't be hard for some price retracement. targeting down to 161.5. Let's switch to NVIDIA. NVIDIA also has just been on a tear lately, bringing massive returns. There's been a 3-day bounce range on it, and it's currently set to open slightly gap down on Monday. We can absolutely afford a pullback here. The ideal higher low location is a previous high and closes a gap. That is right here around 123. If Monday's gap down fills and we got back into last week's bounce range with a look below and fail, I would target the top of that range, which would be yesterday high day. Let's move over to Tesla. I'm loving the moves on Tesla. Up 30% since missed earnings. Up something nearly 50% since its capitulation lows. It's insanity, but so is the move down. Tesla moves crazy. It's another gap down after hours Friday stock, currently in a bull flag or bullish consolidation pattern. If we can fill the gap down Monday and get a look below and fail, I would look to target 349 on the upside and then look for a higher low above that to target 358.5 up here. We do have some thin structure in between there to help out with that. Otherwise, if we get a pullback here with a counter trend move to the downside, I would look to trade it level to level down, watching for reversal patterns at key levels. So if we get a lower high below 337.5, target 325.32, lower high below that, target the top of this gap at 311.94. If we continue and fill the gap, I would definitely be looking for a reversal by that time at 307.11 to move back up in the upward direction. Let's take a look at Amazon, which is right here. Kind of a messy, ugly chart. Maybe if I turned on extended hours, it would be a little easier to see here. All right. Amazon has a pretty volatile chart. Gaps above and below, and currently set to gap down Monday as well. How do you determine the strength? How do you determine which direction the strength is when you have a gap above you that didn't feel like it should have, and you have a gap below you that didn't feel like it should have? And I think the best answer to that question is to look to the overall trend. On Amazon, that trend is obviously an uptrend. We're going to be gap down into a gap in nothing much changes between if nothing between much changes between Sunday and market open on Monday. There are a lot of things on this chart that make systematic trading more difficult, though there is clearly lots of opportunity here. There are easier charts to trade, okay? I'll provide 3 possible paths for Amazon, and you're just going to have to use some common sense, logic, and judgment, as some of these paths could end up intertwining with each other. So over here on path A, that would be that we open gap down on Monday, have a strong move down out of the gate, you catch a lower high below the key level 199, or on a downward sloping VWAP, and go for closing the gap below us, okay? Alternate path is path B. We come up, close Monday morning's gap down, get a gap fill reversal at yesterday low a day, then come back down and start targeting these gaps below us. All right, path C is we open gap down on Monday and just move straight up, close that, fill that gap from Monday morning, get a higher low below yesterday low a day, target yesterday higher day, get above that, target the gap above us up there. Okay, let's take a look at Apple. All right, Apple is really the Mag 7 stock that is struggling like none of the others. We did see some strength with a massive gap in the upward direction, but we really haven't seen much continuation from there. We have a solid hard higher low, but have not, but have been unable to get a solid higher high. Okay. Let's see if we could see that on a daily. All right. As you can see, we got a higher low here, but we haven't been able to create a higher high despite the strength of other stocks, despite the strength of the stock market. Um, we just been unable to see that on Apple. So we've really just been seeing consolidation and going essentially nowhere. It's starting to emerge, in my mind, as yesterday's leader. They have struggled to keep up with AI expectations, and if they don't start making some major moves, they could get into trouble as far as staying as a leader of the stock market. All right, now that I'm done talking smack about Apple, this is not my favorite chart for day trading. Apple is hard because it moves super slow. You certainly don't want to trade a zero DTE on Apple. We have gaps above and below. We're set to open gap down Monday. The base case on that would be a gap fill reversal to the opening print. I don't know that I'm going to want to take any trades on Apple unless a catalyst comes along to bring some movement. So I'll just show my basic pathing with these arrows here. Take a picture, write it down. Another stock that I would like to take a look at, as I mentioned earlier, is United Healthcare. If I can find the chart here. All right. This is the 200-day moving average. This line here, this is the 50-day moving average. Something interesting we see on United Healthcare is that we had massive selling going on before the fraud allegations were made public. Price blew right through and gapped down right through the daily 50 and 200 moving averages, which are huge support lines for major institutions. This was before anything was made public. The major gaps down on a stock like that grab your attention, like, hey, what's going on here? Well, it looks like, to me, somebody probably knew something and got rid of it with quickness. The type of selling happening here is the type where people are just dumping as fast as possible. Thursday brought here what looks like capitulation. Let's go down there, take a look. The reason Thursday looks like capitulation low here is A, just the massive amount of selling that brought us down here in a quick amount of time. Uh, B, the fact that it closed as a hammer candle, which would be indicated of positions closing or buying all day long. C, the massive amount of volume that came with that day. Um, so it really just looks like capitulation. And then the next day, Thursday, we have continuation to the upside. And something I also found out is that if you look at the internal insider trades that went on, CEO of United Healthcare bought massive amounts of stock on Thursday or Friday, one or the other. So that's interesting. I do believe this is probably the low for at least a period of time down here. Uh, I'm not going to say it's a great idea to buy calls here or to buy shares here. We don't know what's going to happen with the fraud. What if this turned into an Enron and it gets delisted? I mean, that's probably unlikely considering the importance of the company. But there's just so much uncertainty surrounding this. And while uncertainty can provide massive opportunities, when it comes to fraud, stock market, you just really got to be careful. For a trade idea this week, I would like to bring to you the idea on PayPal. Um, with PayPal, you could see we've kind of been in this range here. Um, we have support here at 71.7. On Friday, we looked below that level and actually, or it was maybe it was, yeah, it was Friday. We looked below that level and we failed to stay below it, pushing us back into this range. So with that, you would want to be targeting the next level up on a look below and fail. So what we'd be looking for is either a break of this trend line and then targeting 74.4, or a bounce off of a move down and bounce off of 71.7, targeting same location, 74.4. That trade is like a risk reward of 1 to 9. If it does get below this 71.7, I am no longer interested in that trade at all, and I would take it off the table. That's it for this video. If you find anything useful, if you want to follow along for tips, etc., follow us on Facebook at Daytrader. Also, click like, click subscribe on this YouTube video. All right. Have a green trading week. See ya.